Welcome back to our REIQA Real Estate Education Program. Be sure you started with the welcome video and have completed Section 1 Real Estate starting out. In Section 2, you will learn the basics about all the many different strategies in real estate investing for acquisitions. We will cover the step-by-step process of doing a deal and touch briefly on a few strategies that will go more in depth in later sections. In the beginning, new investors should not be focusing on building a buy and hold rental portfolio unless you already have access to a lot of capital. In my opinion, instead, you should be focused on the strategies that will help you grow and increase your capital the fastest. The more capital you have, the better your position, and the more opportunities you will have the ability to buy. It's all about flipping the same money over and over in the same year, generating a higher percentage and overall more return on your capital. That will put you in a much better position to start holding more rental properties. So, I would suggest wholesaling or wholetailing at first, with maybe some flipping, but don't worry about buy and holds at first unless you can get in them with minimal or no capital by using creative financing. Build up your capital more first. Let's go over the step-by-step process to actually do a real estate deal. You will go through this same process on almost every deal you do. Step 1. Find a property owned by a motivated seller. We'll go more into marketing in later sections. Step 2. Contact the property owner. You may have to trace the property address in order to find the owner's contact information. We will cover ways to trace owners in a later chapter. Once you contact the owners, ask their reason for wanting to sell so you can identify if they're serious or just curious. Are they motivated? Also, I always like to ask their asking price. I usually ask something like, if we purchased your property today, paid for all the repairs for you, paid all the closing costs and fees for you, what would you take all cash to get rid of the headaches today? Step 3. Gather all the needed information to be able to properly evaluate the property and run the numbers. The more you know about the property, the better you will be at making good, profitable offers. You at least need to know the address, property type, the number of bedrooms and bathrooms, the square footage, and preferably the year it was built, the lot size, and the current condition of the property. Try to get photos or video from the seller if not meeting in person. If you do not have any, be sure to take some when you walk the property. Step 4. Run the numbers based on recent comps or comparable properties sold in the same neighborhood so you can figure the ARV or after repair value. We'll go more into comping properties in a later section. Step 5. Walk the property and estimate the cost for all needed repairs, or have a contractor bid the work if you do not know repair numbers well enough. Step 6. Take the ARV and multiply times the discount percentage for your market. This is what you or other investors typically look to pay. This is usually between 60 to 90%. Now subtract the estimated repairs to get your MAO or max allowed offer. Deduct your markup if planning to wholesale the deal. Step 7. Make the offer and negotiate if needed. My offer always sounds something like this. So, if we pay to do all the repairs, cover the attorney fees, pay for the abstract, and pay all the closing costs and other fees, how much cash in your hands would it take to let us take care of this headache for you today? Once I get that number, I can negotiate down if needed or negotiate creative financing. Step 8. Write up a contract to purchase the property. If you do not have your own contract yet, there's a sample one on the website. But make sure you either use your state's contract or have an attorney prepare one for you, or at least proofread the one you intend to use. There's different state laws that may be required to be in your contract, depending on the state the property is located in. Step 9. Open escrow at a title company or with an attorney by sending or taking them a copy of the signed contract. Step 10. Pay the earnest money deposit to open escrow if there's earnest money offered in your contract. Step 11. Do your due diligence, have inspections, contractor bids, etc. Also, if wholesaling the deal, the marketing of your contract or equitable interest happens here. Once you find another buyer, either an assignment agreement or second purchase and sale contract is signed by you and the end buyer, and immediately forward a copy to your escrow agent, along with any additional deposit due by the end buyer. Step 12. Respond to anything else the closing agent may contact you about. Closing on the property will typically be 7 to 30 days after escrow is opened, depending on the state. Usually, a day or two prior to closing, the escrow agent will send out HUD settlement statements to the buyers and sellers, breaking down their numbers, including what's owed and what will be received by the seller. When scheduling closing in your contract, depending on the state, it can be anywhere from 7 days to 30 days or more. If you want it fast, ask how long it will take up front before doing your first deal. In Oklahoma, for example, we are an abstract state, so at minimum it takes typically 21 days. Step 13. Close on the property. If you're not wholesaling it and pursuing other exit strategies, it's now time to get to work. It's all that simple.